Hey guys, this is Chris Stout with Stout Capital. We're going to go through some key metrics that we see all the time when some of our clients come at us and say, is real estate too slow an investment? It doesn't seem like this investment makes sense for me. It's going to take too long. When people say real estate is too slow, they're wrong. Real estate isn't too slow. They don't realize how quickly time moves. It's always, oh my gosh, can you believe what so-and-so purchased this for 10 years ago? You hear it all the time. It's not, oh my gosh, I can't believe how much I paid for it 10 years ago and how little it's worth today. You hear the same story over and over. Can you believe 30 years ago so-and-so paid this for this building? Constantly, over and over, it's the same story. This story will continue. People need a place to live, and this is what we do. We invest in housing. The only problem is one day people might believe it's a better idea to live outside, but I believe that's not going to happen in my lifespan, and I don't think it's going to happen in yours. So let's get down to some underwriting, and I'll show you why real estate is not slow. Okay, guys, so I have an underwriting model in front of me from one of our deals to show you the possibilities of real estate and the power of a refinance. Remember, real estate is not too slow. You just don't realize how quickly time moves. So here on our screen is an investment of $100,000 in a deal that we just did. Here you see at the top an investment of $100,000 and what the $100,000 looks like over the course of an 8-year term. So total return on investment, pay attention to this column, and I want you to pay attention to this column in a moment. Okay, so an investment of $100,000 will return $6,821. Year 2 will return $7,551. Year 3 will return $6,270. Okay, so you say I invest $100,000. Year 1 I get $6,800. Year 2 I get $7,500. Maybe real estate isn't for me and the returns aren't strong enough. You're not taking into consideration the power of the refinance. The power of the refinance is this. Year 3, we do a refinance of the property and we return to you $70,419. That is a non-taxable event. Refinances are a tax-free event, non-taxable event. So $70,419 comes back to you non-taxed, ready for reinvestment. And then this investment will continue to return cash flow for the remainder of the investment. Year 4, $4,200. Year 5, $4,788, year 6, $2,864, year 7, $3,498, and year 8 will return your capital, because this is technically all you have left in the deal. We'll return that to you, and then we split the proceeds of the sale 70-30. So 70% goes to you, 30% comes to us. The better you do is the better we do. This is why we do it. So your share of the profits would come back to you. In this instance would be $120,806. That is your 70% of the sale transaction. Okay, here's where it gets interesting. I just brought up another deal. So we'll call this deal number 1. This is deal number 2. What I did is we're gonna say in year 3, when you got your $70,419, you reinvested it into another deal. And now you're still playing with the original $100,000 investment. And let's be conservative. We'll say by year 4 is when you make this investment. So we're going to align year 4 of investment number 1 and year 1 of investment number 2. So in year 4 of this investment, you took your refinance proceeds and you put it into deal number 2. So year number 4, you will get a check for $4,205 and $4,804. Year 5, you will get a check for $5,317 and $4,788. So now by year 5, that original $100,000 investment is returning you $4,700 and $5,300. You are getting $10,000 of passive income a year from investing $100,000 by year number 5. By year number 6, this is when it gets really interesting. Year number 6, you collect $2,864. You get $4,415, and we hit another refi period of $49,588. Okay, let's bring in deal number 3. Now recap, we are in year 7 of deal 1. we are in year 4 of deal 2, and we are in year 1 of deal 3 because we reinvested our refinance proceeds every time into the next deal. So at year 7, you will have a return of $34.98, $29.61, and $33.83. And this could just keep going and going and going off of the original $100,000 investment. So in 7 years, you'll be getting $3,498, $29.61, and $33.83 a year off of the original $100,000 investment. It really, really starts to pick up speed. That's the power of real estate, and that's why we get started as soon as we can. So is real estate slow? Yes, real estate is a slow start, but it really, really picks up a tremendous amount of speed. This is when it starts to be a real supplemental income. Remember, passive income is taxed differently than earned income. So the depreciation of these properties will be canceling out most of the taxes, so most of this will be tax-free. This is why the big boys jump in this game. This is why you should be getting in the game. If you don't get in the game yourself, you could invest with us. I am certain that you should have some money in these deals. We are professionals. We know what we're doing. We know when to sell. We know when to refinance. We are hyper-focused on the economy at the time and the metrics of the deal at all times. We know when to do stuff. Leave it up to the professionals. If you want to invest yourself, feel free to reach out to me at any time. You will see my email down in the link below. Email at any time. I'd love to answer any question you had. And I'm always up for a phone call. So happy investing. Thanks for watching. Remember to hit the like and subscribe and keep watching our videos. Thanks, guys. Speak to you soon.